Investors bought nearly 1 in 7 homes sold in top metropolitan areas across the U.S. last year, the most in at least 2 decades. That's according to data from realty company Redfin. Analysis shows that neighborhoods with mostly black residents were heavily targeted. Heineken is warning that it could be increasing the price of beer due to inflation, blaming the soaring costs of ingredients and energy. The beer company has not said how much it plans to raise prices, but expects it to lead to lesser beer consumption. I don't know about that. And in today's deep dive, tax season is upon us. For some, it's business as usual, but for those who traded cryptocurrency last year, it may be a bit more complicated, especially if multiple wallets and exchanges are used. So here to discuss is Shehan Chandrasekera. He is a certified public accountant and head of tax strategy for CoinTracker. Thank you so much for joining us this morning. I knew you were coming on and we were talking about this, I was thinking about that song, DJ Khaled, all I do is win, win, win no matter what, because I dabbled in crypto and all I've done is lose, lose, lose no matter what. I am the opposite of that song, but maybe it'll have an impact on my taxes. I don't know. So when it comes to cryptocurrency, if you bought some, if you exchange some, who does this apply to? Does anyone who simply bought cryptocurrency in 2021 have to actually report their activity?
Yeah, great question. So if you only purchase cryptocurrencies using US dollars, you do not have a taxable event. So you have nothing to report.
What tax advice then do you have for people who traded cryptocurrency last year?
Yeah, so remember these 5 situations, and if you fall, if you have any of these 5 situations, that means you have a taxable event and you had to file some additional forms with your personal return. Number 1, when you cash out, that triggers a taxable event. Number 2, when you trade one cryptocurrency with another, that also triggers a taxable event. Number 3, when you spend cryptocurrencies to buy a subscription service or good or service, that triggers a taxable event and you had to file additional forms. Number 4 is when you earn cryptocurrency through your employment. It could be staking income, interest income, etc. And number 5 is when you get these free tokens through this process called airdrops. That also triggers a taxable event. So if you had any of those 5 situations, you would have a filing obligation.
You know, at first I thought, does this really impact a lot of people? And then I thought of myself, we had a lot of time at home, we were watching, business television, and suddenly cryptocurrencies became more readily available for a lot of people. Did a lot of people invest or dabble in cryptocurrency over the last year or so?
Yeah, I think according to some of the studies that I saw last year, there are roughly 46 million Americans with Bitcoins, and that number is increasing every day. Coinbase, the biggest exchange in the US, has over 70 million users. Again, the adoption is increasing every day, especially as these institutions are coming into the market.
All interesting stuff. I know that it's advice that probably I could have used before I decided to dabble in something I know nothing about. Shehan Chandrasekera, thank you very much.
Thank you.